Okay, Facebook, we are live with the first market commentary in what not only seems like ages, but is a long while since we've done this. So it's great to be live. It's great to be back with you. We got a lot to cover today. So I think the last video I did was probably about a month, 6 weeks ago. I've been on holiday, been away. We finished Q2 for our swing traders, and we've got straight into Q3. And I wanted to talk about that. There's a couple of lessons. I don't normally do these on a market review, but I thought this was important. And I'll probably do a longer video on this, just expanding a little bit. But what I'll do is I will pull in the results because I've just been updating them. I've still got a lot of work to do on some of the metrics like max drawdown, max retracement, and all the other metrics that we capture with all of the trades we place. But just to give you an idea, if we go in, you'll notice here, if I go down to essentially the first trades, we had a couple of trades come in on the 6th, but one trade here that came in on the 7th, you can see that there. So essentially, if I just put in July here, so we just put in July, and I'll show you these here. What you'll notice is we've had an exceptionally busy and exceptionally good start to our swing trades. So we've had a lot of trades coming in what effectively is about 20 days. We've only really had a couple of trading weeks in, and we've already had a ton of trades in. And there's a couple of lessons here that I think are really important for you guys to bear in mind, which is you never really know when trades, especially swing trades, are going to come in. You can see we've had a considerable amount there. You don't ever know what the distribution of those trades are going to be. So essentially you can see here we've had an exceptionally good run. Now yes, we've had a lot of short trades across a lot of yen pairs. Those of you that have seen me do other trainings, you'll know that I'm more than happy to trade multiple pairs within a particular currency. So as you can see here, I've got yen pairs, I've got multiple different yen pairs. I don't think there's anything wrong with that. A lot of people say, well, essentially you're taking too much risk when you do that. But as long as you have a very clear process and that you don't try and second guess that. So every time you're trading a specific currency, if cross pairs and major pairs are setting up and you do that across the board, there's nothing wrong in that. So you can see here we've had a lot of trades come in. So not only have we had a lovely winning streak, we've also had on our intraday swing setups, you'll see those in here. Now these are traded at half stake, so in terms of risk to reward ratio you would effectively half that. So what is a 10 to 1 risk to reward winner would essentially be a 5 in terms of cash. That 21 to 1 would essentially be a 10.5 to 1. This one here 4.42, that would be half that, and this one here would be about a 3. But what you can see there is not only we had a good winning run, we've also had a good winning run and a good risk to reward hit. Now this is really important. Firstly, as I've said, you're not always going to have winners. You're not always going to have not only a high win-loss ratio, but a good risk-to-reward ratio all come in at once. And that's an example of it. But this is the point I wanted to make here. If you go back and I whack in quarter two's trades, what you'll notice if I scroll back up is we had a big losing patch. You'll see that there. We had a big losing patch for a big chunk of that period. A lot of the trades that came in May and June, you can see there were losers. And this is important. So there's two key things here. This is where a lot of traders will say things like a particular strategy doesn't work, or they'll say, oh, I don't think this is good. I don't want to trade this anymore. We'll pull away. We'll lose interest. We'll lose focus. And that's exactly at the time that they need to have more focus, more resilience, because you can see not only have we completely outstripped those losers purely from a win-loss perspective, you'll also notice that the risk to reward for those trades, those winning trades, is far greater. And in fact, what you'll notice is if you go back a little bit for the quarter, even though from a win-loss perspective, Q2 wasn't a winning quarter, because we're operating at high risk to reward ratio, those losses were made back. So we were fairly flat for Q2, but as you can see for Q3 so far, we've had a good start to the quarter. But again, we'll wait and see. So it's important to take trades when they set up, follow your rules, follow your strategy, and as you can see here, be on top of your data so you are able to monitor exactly where you are. And that's one of the things that we're big on here at Traders Support Club. All right. So I will do another video in a bit more detail on this. But today, the purpose of today is, as always, to have a look at our Markets, go and have a look at the main indices because we've had a little bit of sell-off start of the week. There was a lot of selling. You can see here if we look at the S&P. So we'll start with the US indices. Have a little look. So the S&P, you can see here new highs. Uh, Basically a week ago, we sold off. Now, if we look at this daily chart, what you'll notice is that the chart's actually behaving itself very well. What we've had is a pullback. We've had a pullback down to the trend line, a pullback down. We've had a retest of the daily 50 moving average, very similar to back here where the high wasn't as clear. We actually had a close below and then the next day a move back up. So at the moment, for me, short term, to have any change in opinion on this market. So at the moment, I'm not overly bullish, but at the moment the market is showing bullish tendencies. We're making higher highs. Price is still holding up on that trend line. And even though we've had one candle close below the 50, that's when I was really watching this. I was like, right, we've had a close below the 50. Will we go lower? We didn't. We pushed back up, creating new highs. So at the moment, what I'm looking at for this one is unless price was to come down and not only close below the 50 and close below the trend line, my opinion's not going to change. Now, this is really important. Just because we get a close below the 50 in the trend line on a daily basis doesn't mean I'm suddenly going to short this market. It's just in terms of opinion. What I would need this market to do is not only close below, but we would need a clear low, not only below this recent low, but below the previous low for me to start considering short trades in this scenario, because we've not really got any resistance levels that we're coming off of. Remember, each new high is a clear new all-time high on the S&P. Now, if we go and just do a quick comparison to the Dow, go and have a look at the Dow, you'll notice that the Dow, that same area that was giving us a new high on the S&P, the Dow has not managed to do that. We're starting to build up a little bit of a resistance short term here. So you can see that the Dow has not managed to make a new high. It's come back down to that trend line area. You can see we've got two lines in there. It's bounced off that. Now again, we've had plenty of closes recently below that daily 50. But if we jump up to the weekly chart on the Dow futures, you can see, look, we've just had one test of the 21 since 2020. Haven't been able to make a new high. Had another retest of the weekly 21 and we pushed back up here. So at the moment, very, very neutral. We'll have to see if we can get above these highs, get a nice new high, then we could have potential long trades on there. We may get stuck in this little gap, but the same thing is going to apply. I'm going to want a decent close and not just a close below the trend line and below this low. I'd want to see price move down and get below there before I would start to shift my short-term view on the Dow. Nasdaq. Now, interestingly, the Nasdaq nowhere near its daily 50. So Nasdaq taking the lead again for a long period of time. The S&P and the Dow were ahead of the Nasdaq. Nasdaq essentially taking the lead a little bit here, almost in line with the S&P. Both have got new highs, but what you'll notice with the Nasdaq and some of our momentum-based swing traders have actually got a trade or a setup literally today because we've made a new high, and rather than get all the way down to the 50 and that trend line that you can see from further back, we're sitting around the daily 21, so nowhere near the daily 50. So the Nasdaq a little bit ahead and a little bit more momentum. Doesn't necessarily mean it's gonna push on up, but a lot of our guys have got a setup right in here and we'll have an order in for a long, because at the moment, again, we keep making new highs. At some point it will stop, at some point we will correct, we maybe make a move down towards the weekly 50, but at the moment the market is still moving up, so we go with the momentum on that one. Let's have a look at oil, because oil's had one of the biggest sell-offs for a while. You can see the sell-off here really since early July. That sell-off there, in terms of size, very similar to back here in March of 2021. So a little bit of a sell-off there. Now, what's interesting is if we take this out to a higher time frame, you'll notice that what we got was we got a test up here. So a lot of the news and a lot of the stuff you're seeing online is big sell-off from oil, biggest sell-off for this, that, and the other. But very simply, oil just came in and got a retest of the 218 highs. So a nice area of resistance that was also a prior support from back here. So we came into that level. If you look at the weekly chart, in relative terms, off that resistance, so you can see it here, off that resistance area, I would expect a bigger retracement than what we've seen here. Now, at the moment, that could change. But if we look here, all we've done is come down and had a test and actually currently reacted to the weekly 21. So it's not that different in terms of size at the moment, but I would be expecting some sort of retracement off that level, which is what we got. We had a lovely short trade. I'll just go down to the 4 hour so you can see this here. We had a lovely short trade. It was actually two entries. The original entry was here. Nice 3-to-1 trade in there, and then a more discretionary entry just there. So yeah, we had a short trade. I'll just show you this in here. Was there. So a nice 3-to-1. So didn't capture the whole of the move, but got a 3-to-1. So as I've said, at the moment we are reacting on oil to the weekly 21. So at the moment, what I would need oil to do, if I just go back up to the daily, so you can see we've broken the trend line, we've closed below the trend line, and this low is significantly lower than the last two higher lows prior to the trend line. So on oil, rather than, or slightly different view than on the indices, I will be looking for shorts if we can get into this zone here, because that fits, very clearly fits one of our specific swing strategies. We've come off these highs, we've clearly broken and closed below the trend line, and this low, even though it's reacting to the weekly 21, this low is lower than the last two higher lows. So we would be looking for shorts if we come into this area here. All right. So that's my view on oil. Now, my view on oil, I would say my trade would be there. My view on oil is if we come into this area here and then we push back up, then I would be looking for a retest of this level and see what the price action is there. We could have possible shorts there. So shorts here, shorts here. If we break that level and go higher, then I would be looking to go with the new momentum and be looking for longs. Okay, so that's oil. Let's have a quick look at gold and silver. Now, from a daily chart, you can see gold and silver has been quite sideways going into July. Not a lot to report there. If I go, we just look here, we're inside the two moving averages. So inside the 21, inside the 50 on the daily. And then if I go to the weekly chart, you'll see sitting in between the two. So the moving average is very flat, crisscrossing here. So not a lot going on with gold and silver here, still in this sideways block. Haven't been able to get back up and retest the well, around the $30 an ounce mark here. So again, nothing really to do for us on either gold or silver. Euro is an interesting one here. You can see that we had that previously, we had that lovely bounce off the weekly 50, didn't get back up and retest the highs. The major resistance for me where I would be looking for shorts would be back up here. So again, for me at the moment, euro is a little bit in no man's land. If I just go down to the daily chart here, so have a little look at the daily chart. Now, some of our guys were looking for a momentum trade short in and around this area down to the previous lows of March. But for me, price would have to, if I just move this up, price would have to get up to this area here for me to look for against the trade short. And for me, I would need to see price get below these lows for momentum trade short. Momentum trades long would be a bit tricky for me here because we'd need to be really above these two levels. And when we would be, or if we got above these two levels, the challenge would be close to that previous resistance. So momentum longs would be above that resistance. Against the trend shorts would be if it showed the right characteristics up at those highs. For me, probably wouldn't trade against the trade long here because it's not a strong enough level of resistance. See if that got broken, and then I'd be looking for momentum trade short there. So momentum trade short below these lows, momentum trades long above those resistance highs, and possibly against the trades in there, against the trend trades in that area there. So yeah, so euro a little bit sideways for me. Some of our day traders may have options there, but as swing traders, not a lot going on there. So yeah, we don't have a huge amount at the moment. We're looking at oil to see if it can come back up. We don't have a huge amount, but as I've said, we've had a lot of trades come in over the last couple of weeks. Let's just go and have a little look at US dollar yen. I'll just find that on my list. So US dollar yen, we've had a nice, as you can see, a nice trade in here. That idea of getting the trend line break and move back up towards that trend line, that was our trade in there. With yen, for me, because we've had that set up, I would be looking for against the trend trade short up at that resistance, which we didn't make that time. We got close. I'd be looking there. If we were to break that, I'd be looking for momentum trades along. And momentum trades short are actually quite a distance off for us. We would need to be all the way down in this area here. We can actually get rid of that line there. So we need to be quite a way down for momentum trade short. So again, not a lot for us to do on US dollar yen, but if price does want to come back up, we would look for shorts up at the resistance, which is, if I just scroll in, that's the 2020 highs. Okay, so that's all I've got for you today. I hope that was useful, and I will catch up with you again very soon.